Friends, let us make a beginning with study of previously tested questions in the topic of advance tax and recovery of taxes and interest under section 234 ABC, of course followed by the discussion on previous questions in the topic of refunds. Now, in this context, let us first try to understand 220. What is the interest prescribed under section 220? See, when you file your income tax return, you will be paying the self-assessment tax. Of course, we have got four different ways of collection of tax. One is the TDS, another is advance tax, third is the self-assessment tax, fourth is on you are getting a demand notice, you are paying the tax. Once a tax is demanded and there is a delay in paying the tax, the consequential effect is what? You will be liable for certain interest. So now, here the question before us is, under what circumstances can interest be levied under section 222, that is section 220 subsection 2 of the Income Tax Act 1961, be reduced or waived, and by whom is the power exercisable? Can interest be waived after taxes have been paid belatedly? See friends, 234 ABC interest is a mandatory and penal interest, and waiver, I don't say there is no way by which waiver can happen with the 234 ABC, but there is a CBDT circular and guidelines are issued how the commissioner can waive that 234 ABC interest. But as far as this regular tax being paid belatedly, whatever the interest under section 220 is there, that the assessing officer can waive, subjected to the satisfaction of the conditions prescribed. So what we are saying, belated payment of the taxes does not relieve the assessee from the liability for payment of the interest. However, even after the taxes have been paid belatedly, assessee may very well seek the reduction or waiver in the interest, subjected to the satisfaction of the conditions prescribed under 222A. It's a point. So as a student, you are supposed to understand the point. Assessing officer has got a power to waive the interest for belated payment of the taxes. Write down that point. That is, belated payment of the taxes. Belated payment of the taxes does not relieve the assessee, does not relieve the assessee from the liability for payment of interest, from the liability for payment of interest. However, assessee may seek for reduction or waiver of interest, may seek for reduction or waiver of interest subjected to the conditions, subjected to the fulfillment of conditions, subjected to the fulfillment of conditions given under section 220 given under section 220 2A, subsection 2A. Friends, November 2010 question, the question reads as under: explain the duty of the assessing officer under section 220 subsection 6, that is, assessing officer while acting under section 220 subsection 6 should not act as a mere tax gatherer but as a quasi judicial authority. See, point of interest is assessing officer, can he exercise any discretionary power? Yes, discretionary power is there, but it must be exercised very judicially, and he should always see what is the reason for any concession or waiver that he is allowing. So in that context, what is stated is, as per section 220 subsection 6, where the SC has presented an appeal under section 246A, assessing officer may, in his discretion and subjected to such conditions as he may think fit, impose in the circumstances of the case, treat the SSC as not being in default in respect of the amount in dispute, even though the time for the payment has expired, as long as such appeal remains undisposed of, is a point. See, where the assessing officer should exercise his discretionary power. What are those circumstances? By looking in the SSC what he is asked to waive the interest for the belated payment of the taxes. For that, what we are saying is, that is, he has to look into the assessment history of the SSC. Then his conduct and cooperation in relation to the department, and points that the SSC raised in the appeal, and chances of recovery in case the appeal is dismissed, and what the hardship the SSC is going to undergo in case if this interest is levied. All these points must be kept in the mind, and accordingly he has to exercise his discretionary power. So as a student, what you are supposed to make note, kindly make note of this, that is, the power vested in the income tax officer, the power vested in the income tax officer under section 220 subsection 6, under section 220 subsection 6 is a discretionary power, is a discretionary power. Then he is bound to apply his mind. He is bound to apply his mind and should consider the following factors. And should consider the following factors. A, assessment history of the SSC, assessment history of the SSC. B, conduct and cooperation of the SSC, conduct and cooperation of the SSC in relation to the department, in relation to the department, and then points raised by the SSC in an appeal, points raised by the SSC in an appeal, then chances of recovery in case appeal is dismissed, then hardship to the SSC by insistence on immediate payment, Then friends, the next issue which was tested twice in the exam, November 2003 and May 2008, is tax recovery officer can recover arrears of the demand from the SSC in default out of the sale proceeds of the property attached after making a proclamation. How such a proclamation can be made under the Act? See, point here is proclamation in case of a movable property, proclamation in case of an immovable property. Of course, this I ask the students to remember, because these type of questions nowadays are not frequently visited questions. But as a student of tax and tomorrow's tax, as a practitioner of the tax, you should understand this particular procedure. Point is, tax recovery officer shall issue a proclamation in the language of the district of intended sale, specifying the time and place of the sale, whether the sale is subjected to the confirmation or not. Please remember, such a proclamation shall be made by beat of drum or other customary mode, what is prevailing in there. See, this is in case if the property is not seized. In case if the property is actually seized, then in the village in which the property is seized, or if the property is seized in a town or the city, then in the locality of where that property got seized, or such other places which the tax officer, recovery officer may direct. And also in case of a property attached otherwise than by the actual seizure, in such a places which the tax recovery officer may direct. And in the income tax office also, in a prominent place, the fact that this particular property is seized and is going to be auctioned, बोल के लगाना पड़ता. And then the proclamation of immovable property, what is stated, that is, proclamation of sale of immovable property shall be drawn up after a notice to the defaulter and shall state the time and place of sale. So you have to inform to the defaulter of that particular tax that your property is going to be sold. This is the time of auction, this is the place of auction, you have to give a notice to him. And then in case of immovable property, what is stated is, first, the revenue, if any, assessed upon the property or any part thereof, what is the minimum price for which any bidder has to bid for that particular property also will be prescribed. Only when that minimum price comes, then the sale will happen of the immovable property is the point. And similar to your movable property, that in the income tax office, in the prominent place, it must be clearly be stated that so and so person is liable to pay this much of the tax, and we are we have already attached that particular property and now it is for the auctionable K. So this is how the procedure of proclamation and all is prescribed in case of a movable property and immobile property. So what will happen in case if you are not paying the tax, they will attach your property and will make sale of that particular property. While making the sale of that particular property, a procedure is prescribed. C. State the circumstances under which a certificate can be issued by the assessing officer to the tax recovery officer. Now this procedure is no longer a procedure in practice, it is an obsolete thing. That is, assessing officer will issue a certificate to the tax recovery officer on the basis of that certificate will go and attach the property and make sale of the property. It is not the present situation. In the present situation, what is it? That is, it is being amended by the Direct Tax Laws Amendment Act of 1987. Now under the present law, where the SC is in default or is deemed to be in default, then the TRO, tax recovery officer, will assume the jurisdiction and he draw under his signature a statement in the prescribed format specifying the amount of the arrears due from the SSC, and such a statement shall be now called as a certificate. Earlier, tax recovery officer should get the certificate from the assessing officer. Now tax recovery officer himself can prepare a certificate specifying the amount of the tax due, and under his signature he will prepare that particular certificate is a point. And all this change in the procedure is made because of to avoid the unnecessary delay and the procedural hassles. So as a point you can write down, that is, under the present law, where the SSC is in default, or is deemed to be in default, tax recovery officer assumes jurisdiction by drawing up under his signature a statement in the prescribed form, specifying the amount of arrears due from the SSC. Such a statement shall be called as a certificate. Then friends, what is this Garnishi order? May 93, this question was. That is, Raman is an SSC who is in default for payment of the tax amounting to 5,000. No recovery certificate has been drawn upon for recovery. In meantime, it came to the notice of the assessing officer that Raman has to receive a sum of 5,000 from one Mr. Babu. Now, that Babu is employed in a company. So the assessing officer therefore issue a notice under section 226(3) to the Babu directing him to pay the amount to the income tax department in discharge of the debt he owed to Mr. Raman. On his failure to do so, assessing officer issues a notice to the Babu's employer to withhold the Babu's salary as an SSC who is deemed to be in default. whether the action of the assessing officer is justified. पहले क्वेश्चन आपको समझ में आए तो आंसर वी कैन वेरी वेल डिस्कस. What is it? Let us suppose Chakravarti need to pay a tax of 5,000 rupees. Now income tax officer asked Mr. Chakravarti to pay. Chakravarti failed to pay. Later income tax officer came to know that Mr. Vardhan has to pay to Mr. Chakravarti 5,000. Then assessing officer asked Mr. Vardhan, since you are indebted to Mr. Chakravarti, pay whatever you require to pay to Mr. Chakravarti to the department. Vardhan ignored that particular letter. Now the income tax department wrote a letter to Vardhan's company. Vardhan is employed somewhere, stating that your employee is a SSC deemed to be in default, so kindly attach to his salary and remit the same to the department. Can this happen? What we are only trying to say is, that is, in case if the Vardhan is having a property or attaching the property is okay. But salary means generally family is dependent. Somehow law states that in a situation like this, department cannot attach the salaries. Department cannot attach the salaries is a point. So how the answer got developed? Section 226(3) provides that every person to whom a notice of the demand for recovery is issued under 226(3) is bound to comply with such notice. And if such person fails to comply with such notice, he shall be deemed to be an SSC in default for the amount specified in that particular notice. Then in that case, recovery proceedings as prescribed under section 222 to 225 can be very well initiated. So in the given case, a notice is issued under section 226(3) to the Babu, a debtor of the Raman, and he failed to comply with the same, hence he shall be deemed to be an SSC in default. So there is no second opinion on it. Definitely that Babu is a SSC deemed to be in default. The assessing officer can therefore initiate the recovery proceedings against the Babu in respect of the amount specified in the notice by following the procedure prescribed under section 222 to 225. Assessing officer can recover from Babu the amount specified in the notice issued to him only by modes of recovery which are prescribed under section 222 to 225, and cannot resort in a case to section 226. So there is no provision that amount due to a third party who is a debtor of the SSC can be attached and recovered as an arrears of tax. Therefore the action of the assessing officer is not justified. So the whole point how you have to develop the answer when a question of similar nature comes in the exam, there are few points which you have to touch in the recovery proceedings. Write down those, jot down those points. That is point number 1. Section 226 subsection 3, section 226 subsection 3 provides that every person to whom notice of recovery is issued, is bound to comply with such notice, and if he fails to comply with such notice and he fails to comply with such notice, then he shall be deemed to be an SSE in default. He shall be deemed to be an SSE in default. Then proceedings can be initiated. Against such person, in the manner specified under section 222 to 225. And department cannot resort to the recovery mode specified under section 226. And accordingly salary attachments cannot be made to recover the arrears of tax. So these are the few points which you should remember in the recovery proceedings. I think holistically you have jotted down around 6 to 7 points. That is enough when you are preparing for your CA final exam. Of course, I am only saying that is enough for you to prepare for your CA final exam. As a practitioner, you should go through section to section very clearly. Now, I am moving to the most interesting part of it. Interest under section 234A, B, C and D. Now, the first question is, our first issue is, if return is filed within the due date, there is no need for you to levy the interest under section 234A. Basically, what is 234A interest? 234A interest is the interest for delay in filing the income tax return. Second important thing is what? When 234A interest cannot be levied, even if the return is filed belatedly, before the due date for filing the return, if the total amount of tax payable is completely paid, then there is no interest under 234A. So under two circumstances, 234A interest will not be levied. One is return is filed within the due date, or second thing is return is filed belatedly but whole amount of the tax is paid before the due date. Under these two circumstances, 234A interest will not get levied. Write down the point. That is, no interest under section 234A no interest under section 234A can be levied in the following circumstances. In the following circumstances. A, what is it? Return is filed within the due date, or B, total amount of tax payable is paid before the due date, and return is filed belatedly, See, I'll make you to work out a small problem on how to compute 234B and C interest. Okay friends, for the simple reason why I am asking you to do this particular problem is, many a time, even after preparing for the direct tax paper, I found somewhere the CA finalists are not confident in calculating 234BC interest. Of course, if you open a reckoner or if you open Singhaniaji's book, probably many situations he has made the reader to understand. Probably if I look at the students' trauma, they are looking at so much of the procedure, they leave that particular computation. Mainly why it happens? Because there in that textbooks, problems are solved about how to compute the 234B and the 234C interest after completion of that particular assessment, again if the case is taken up for reassessment, or whatever the returned income is different from the assessed income, how to compute the 234BC interest and all. And your paper setter knows that, looking at all that, you will ignore 234BC interest calculation. Our expectation is not that you learn how to calculate the 234BC interest after the assessment gets done. All that is not the point. Our interest is for the first time when the return of income is filed, and if there is a failure to comply with the advance tax provisions, at least you know the bare minimum computation of the 234BC interest. So my whole effort is only to see that you at least know the bare minimum provision. Write down the question, that is, a firm made the following payment of advance tax, during the financial year 2011 and 12. You have to get such a interest that this question is going to come for this particular exam. So Mr. Chakravarti is carefully making us to learn this. With that feeling, you start writing. Dates: 15th September 2011, 9 lakhs. Then 15th December 2011, 9 lakhs. 15th March 2012, 15th March 2012, 12 lakhs. Total 30 lakhs. Now, the income returned by the firm, is 100 lakhs. Under the head business. And rupees 15 lakhs. By way of long-term capital gains. On sale of a property. Affected on 1st March 2012. Now, what is the interest payable by the SSC? Under section 234B, and under section 234C. Then return is filed within the due date. See, first, what should be the approach you try to get into? Point of interest is, first you should compute the tax obligation. Write down calculation of income tax payable. That is, on long-term capital gains, 15 lakhs into 20.6%. 20% plus 3% tax on that 20% means 20.6%. It works out to be 3,09,000. On business income, what is business income, friends? 1 lakh. On business income of 1 lakh, not 1 lakh, 1 crore. 100 lakhs means 1 crore. That is 1 crore into 30.9%. It works out to be how much, friends? 30,90,000. So put together, what is it? It is 33,99,000. 33,99,000. See, point here is, there is no surcharge. Why? Surcharge is only there for the companies, provided their income exceeds 1 crore and all. Here it is a partnership firm. Friends, first 234B interest, if I look at, obligation to pay 234B interest is what? In case if there is a failure on the part of the SC to pay the advance tax, or whatever the advance tax paid is below the 90% of the obligation to pay the advance tax. Here on 33,99,000, if you make 90%, it is more than 30 lakhs it will come. Got it? So on that pretext, since advance tax paid is below 90%, definitely there is an obligation to pay the 234B interest. 234B interest should be calculated from which date to which date? From the 1st of the April of the relevant assessment year to the, what is it, your date of filing of the return. So how many months? That is return is filed well within the due date means, let us suppose on the due date they are filing the return. What is the due date? 31st July. So April, May, June, July, 4 months interest. At what percentile? 1% per month. So write down friends, that is interest under section 234B. Interest under section 234B. Period brackets 1/4/2012 to 1/4/2012 to 31/7/2012. 31/7/2012. Amount on which interest is to be calculated. Amount on which interest is to be calculated. 33,99,000 minus 30 lakhs. 33,99,000 minus 30 lakhs. That is 3,99,000. Now, rate of interest 1%. Rate of interest 1% per month. So, amount of interest 3,99,000 into 1% into 4 months, not 4/12, into 4. So that and all makes it to what, friends? That is 15,960. 15,960. Now you should know how to calculate the interest under section 234C. Interest under section 234C. Before you calculate the interest under section 234C, you should get into your mind one point. Here capital gain is arising. In which quarter? In the fourth quarter the capital gain is arising. So up to third quarter there is no capital gain. So it is not possible for one to have the good sleep and dream that he is going to make sale of a capital asset and he is going to get this much of the capital gain. So law is kind enough to say that whenever a capital gains come, that capital gain income is to be taken only from that particular quarter when actually the capital asset is sold. That is the reason why we are not going for or considering the tax obligation on capital gains for the second quarter and the third quarter. Because in case of other than companies, only 3 installments commencing from September 15th, December 15th, March 15th. In case of company SSCs, what is it? It is your June 15th, September 15th, December 15th and March 15th. So since this being a non-corporate entity, you have only September 15th, December 15th, March 15th. So what is the obligation or what is the amount on which 234C interest is to be calculated? See friends, try to understand 234B and 234C, which is more dangerous. 234B is more dangerous because it can extend till the date of your assessment. Whereas your 234C interest is restricted only for 3 months, 3 months, 3 months, 1 month in case of corporate entities, or non-corporate 3 months, 3 months, 1 month, that way. So one important note you write, later on you can take the computation table, that is note. For calculation of interest under section 234C, for calculation of interest under section 234C, long-term capital gains tax, long-term capital gains tax of rupees 3,09,000, of rupees 3,09,000 is to be included, in the last installment only, is to be included in the last installment only. As the asset was sold, on 1/3/2012, on 1/3/2012, and next installment due for that, and the next installment due for that purpose, is 15th March 2012, is 15th March 2012. Now, interest computation under section 234C, interest computation under section 234C. How many columns? 1, 2, 3, 4, 5, 6, 7, 8, 9 columns I want. 9 columns. First column name, installment date. Learn it in this manner so that you can also train your junior. Installment date. Then total tax due. Total tax due. Third, advance tax due. Advance tax due percentile. Then amount payable. Then amount paid. Then shortfall. Then rate. Then months. Then interest. First, in the installments date column, 15/9/2011, 15/9/2011, then below that 15/12/2011, below that 15/3/2012. As far as the total tax due is concerned, for the first 2 quarters, that is September 15th and your December 15th, you write 30,90,000, 30,90,000, whereas in the last quarter you take 33,99,000. Then advance tax due percentiles are 30%, 60%, 100%. So what constitutes 30% of 30,90,000? 9,27,000. 9,27,000. What constitutes 60% of 30,90,000? 18,54,000. And what constitutes 100% of 33,99,000? 33,99,000. Then amount paid. What is the amount paid? By September 15th, 9 lakhs. By September 15th, 9 lakhs. By December 15th, 9 plus 9, 18 lakhs. And by 15/3/2012, it is 30 lakhs. 18 plus 12 is 30 lakhs. What is the shortfall? 9,27,000 minus 9 lakhs is 27,000. 27,000. 18,54,000 minus 18 lakhs is 54,000. And then 33,99,000 minus 30 lakhs, how much it is? 3,99,000. Then what is the rate? 1%, 1%, 1%. How many months? 3, 3, 1. So calculation, of course you can make use of your calculators, but that you do in your practice. At this juncture you just apply. That is 27,000 into 1% into 3 is 810. 810, 1620, 3,990, put together 6,420. 6,420. Then friends, having successfully learned how to calculate 234B and C interest, at least what questions are being tested in the exam. Friends, some of the students prior to I start this particular lecture were asking a question. Sir, how many times in the exam they asked us to compute 234 BC interest? Yes. After November 95, it is not being tested. Right? But nowhere it is stated it will not be tested in May 2012. Right? Why we stopped testing? Try to understand. Institute is like a mother. Knowing very well that the child cannot perform, can mother put a test? No. Only when we are too angry with you, probably such kind of questions will come. Every attempt there is a standard instruction that one or the other paper should be tough. If the paper which the institute want to make tough happens to be the direct tax paper, probably this type of questions will come. This type also now they cannot afford to give 16 marks question. If that is a case of 16 mark question, you should well prepared with what the problems that are there in the Singhaniaji's book. Right. So in that context, try to understand your minimum knowledge we are expecting even at the final level, we are only expecting the student to have at least minimum knowledge. So don't get worried about how to get expertise knowledge in a subject of direct taxes. Bare minimum we are asking. If at all once more 234 BC gets tested also, they will not complicate too much. Minimum, because institute expects that when as a student you are doing the practical training, 234 BC interest calculation should not be a tougher task for you. But our own experience says that definitely in the suggested answer on the back of it, it will come majority of the students have failed to attempt the question on 234 BC interest calculation. Right? So slightly work out those areas which majority of the students ignore. Now as far as 234D is concerned, it is a interest on refund. See, I will not trouble you by reading the question. Try to understand the concept here. See, today what is the concept? That is intimation. You file your income tax return. The department now don't want to pay the interests. So first what the department is doing, the moment you file your income tax returns stating that you are entitled for refund, let the SSC after making a prima facie adjustments give the refund. बाद में जब we take the case for scrutiny and the assessment, it is found that erroneously that refund is taken by the SSC, then whatever erroneously he has taken the refund, on that department can get the interest. Right? So your 234D aims at such kind of interest. Now in one particular case what has happened? In one particular case what has happened? The SSC made a claim for the refund of 45,000 and department immediately gave that particular refund. Later on it is found that actually they are entitled only for 42,500 refund, whereas they claimed 45,000 rupees of the refund. So now a demand notice of 2,500 rupees asking the SSC to pay is given. Now the SSC is exposed to the 234D interest. Write about this. That is 234D interest. When SSC is granted, excess refund under section 143(1), under section 143(1), then the assessee shall be liable, then the assessee shall be liable on such excess, on such excess at the rate of 0.5%, at the rate of 0.5% per month, from the date refund was granted, from the date refund was granted to the date assessment was completed, to the date assessment was completed. Then friends, 234 BC interest, when it may be reduced or waived. Point of interest is, when I am filing my income tax return, there is a law which is prevailing, and based on that particular law I claimed a particular deduction or an exemption. Subsequently what happened? There is an Supreme Court judgment, and consequently what happened? Or there is an amendment through the Finance Act, with a retrospective effect the law got changed. Because the law got changed with retrospective effect, now I am liable to pay the extra amount of the tax. Consequently, I am liable for 234B and C interest. If that is the case, it is stated as one of the grounds for waiver of 234BC interest. Write down this particular point. That is, interest leviable under section 234A oblique 234B oblique 234C may be reduced or waived in case if levy arises, in case if levy arises due to retrospective amendment, oblique court decision, Few questions which are there on refunds already we have discussed in the assessment procedures. So at this point I will only let you know what it is. Point of interest is one popular question. SC filed the return, he also paid all the taxes, and time limit for taking up the case for assessment is barred. Subsequently he asked for the refund of all the taxes which he has paid by saying that you have not assessed my income. But there Supreme Court judgment in CIT versus Shelley Products, what is it? Generally we will take for scrutiny only 3% to 5% of the cases and complete their assessment. Just because assessment is not completed and time barred, you can't ask for the refund of what the taxes that you have paid. Then friends, another aspect is withholding of the refund. That is, look at the point, November 99 question. After having lost its appeal before the tribunal, the Income Tax Department preferred an appeal to the High Court. Subsequent to the SSC's appeal before the First Appellate Authority, assessing officer had refunded the excess tax paid. Interest under section 244A is withheld by the Commissioner of Income Tax on the ground that appeal against the order of the tribunal is pending before the High Court. The SC earns good profits and has a large turnover. His withholding of the interest on the refund is justified in the law. पहले feel the situation. क्या हुआ? Assessing officer passed the order. SSC has gone to the appellate CIT appeals. There he lost the case. He has gone to the tribunal. Tribunal gave a favorable judgment in the name of for the SSC. Now department has refunded the tax, but department is withholding the interest which it has to pay to the SSC. What is the ground for such withholding? Department has gone to the High Court. So we have gone to the High Court. Let the High Court also confirm what the tribunal has told. Then we will pay the interest. Anyhow tax तो उसको refund दे दिए tribunal का order से, तो interest हम pay करते पहले High Court को let it decide. And moreover that fellow is doing a very good business and earning so much of the income. क्या होगा in case if there is a delay in paying the interest? वैसा थोड़ी आप interest को withhold कर सकते. So what is the point here? Refund or interest thereon can be withheld only when law specifically provides for it or when it has been stayed by the higher authority. Appeal pending before the High Court against the order of the tribunal does not automatically operate as a stay on refund. So as a point of learning you can write a point that is refund or interest thereon, refund or interest thereon can be withheld only when law specifically provides for it, only when law specifically provides for it, or when it has been stayed, or when it has been stayed by a higher authority, or when it has been stayed by a higher authority. Appeal pending before High Court, appeal pending before the High Court against the order of the tribunal, does not automatically operate as a stay on the refund, So friends, I completed the topic of advance tax, recovery, interest and refunds, how the questions can be framed and what are the points as a student you should remember to answer those questions specifically. Again and again let me remind all of you that the holistic objective of this particular discussion on previous examination questions is only to improvise the confidence level of the student. Because the studying is one aspect and presenting is the another aspect. Generally we know, but how it is going to be tested, how we have to write our answers, and valuers are looking at which points, that as a student you may miss out. Probably after listening these lectures you may be able to get how to present your answer, because so many students claim that in direct taxes, in the direct tax paper, at least in Hyderabad, our beloved students will say, sir, if we prepare so well we get 45, if we don't prepare we get 40. That is the point in the direct tax paper. But let me remind you friends, if you prepare very well, Why you will get only 45? Why you are getting only 45 is, I am not denying the fact that you are preparing very well. You are preparing very well and bringing the things to the goal, but you don't know how to make the goal. Just because with what sincerity you are studying the subject, with the same sincerity you are not looking at the previously tested questions. You just try with this, definitely you get exemption in this particular paper. Having made so much of the effort of studying 32 chapters, unless you bring the entire thing into 100 pages and make that 100 pages to revise in about 12 hours, it is virtually not possible to get out of this particular paper successfully. So studying is one aspect, and making synopsis of it is another aspect, and reading repeatedly that synopsis and making writing, this and all should happen before you pass your direct tax paper. All the best.